Good afternoon, everyone. It's Chrissy from Solstice ATR. You can find me on Twitter, Instagram, Discord. Remember, we use adaptive algorithm for trading all different instruments. We are not a broker dealer. Our past performance does not indicate our future results. You can check the website policy for understanding why you can copy it or not copy it. Remember, this is for educational use only and entertainment. If you like this video, hit the subscribe button as well as the like if you see what's out there. I have three things I'd like to cover in this video. Why did the stock market rally on bad news as well as inflation? That's number one from Monday and Tuesday. Number two, did the market generate enough information to get a violent move up and violent move down of 5%? How volatile is the market? And can the market sustain itself where it is in relationship to becoming more bearish or reversing back up? Remember, we're not biased to either side. We trade what the charts offer us on setups on short term in relationship to the weekly, daily, and the 4-hour charts that are on the long term. If you need any information to check us out, once again, you can check the website at Solstice ATR or get in contact with us right at the top number right here. Let's go to the first slide. I had this slide last week in the video. You can see it said October 8th, 2020. In this, I had mentioned that the market can do what it wants in relationship what the CPI numbers are, what the employment rates are, and what the Federal Reserve Board does. I showed the scenarios from 1956 to 2020. The source is coming from Bloomberg. After a very sharp decline, they're usually a good reversal pointing back up after everybody, throws the towel and gives up and sells their positions. Usually we get a following year, not just a 10%, not a 5%, not a 15%, not a 20 or 30%. Sometimes you get violent moves back up more than 50%. So we can see from the 1956 through 2020, I'm painting a good picture. What has the market done every time we had a sharp decline, like from February 19 through March 23rd of 2020, we had that sharp drop and a sharp reverse back up. Here, we've been grinding lower. We had triple tops, fell down, rallied, fallen further, double topped up here on this breakout, tried to break out the 50 SMA, couldn't, fell back down to the 200. We're sitting right below the 200 on the combination of the four instruments, which is the S&P, the NASDAQ, the Dow, and the Russell. You can use SPY, IWM, QQQ, or DJA or DJX. It depends which platform you're on to trade the Dow. So remember, do not have any biased opinion. Trade what the chart gives you, and be not just flexible, be fluid with the market. Let's go to the last slide. If you like us, once again, check us out and hit the smash button. Let's go first to the first slide I have up here. First one I put the SPX here, which is the Fortune 500 companies. We can use the SPY. We can see on the Bollinger Band, this has a 2-band up here, a wider one and a narrow one. And my 18 simple moving average is my midpoint on the weekly. We are testing the 200 SMA. We're just sitting right on it. We came back to the 50% annual 2-year from the low of March 23rd all the way to the January 3rd of 2022, high and low. We tested the 50 Fibonacci, bounced back to close slightly just right underneath the 200 SMA. Does this mean this consolidation here, we found support, or do we continue lower? We'll look up a little bit and continue lower to the backside of the channel, 250 in this combination of those August, September, October rally from before, or do we find support and rally back up? So trade what we see. Let's go put the SPY. I'm going to flip-flop between each instrument to show you where the SPY is. And the SPY, you can see where the SPY is on the weekly. It created that down move. It's sitting right on the 200, similar situation where the consolidation is. And that's the breakout from the November 2020 before the December, and that was the January 4th of 2021 lows, and we are sitting right a little bit shy of it, just right underneath. If we're going to continue lower, we may do this and come back down to the backside of this channel. So pay attention to what the market offers you and don't be biased, okay? So let's go now to the NDX, which is the NASDAQ 100. The NASDAQ 100, you can see it's a little bit slightly below the 200 SMA, which is that white one. We are on the Bollinger Band in a downtrend. We can see we are just shy of the 250 SMA, and we are above the February as well as the June, but we have tested just slightly the July low, July area before the rally up in August, September, October, then the November rally up. We are slightly a little bit underwater because the QQQ, the NASDAQ 100, consists of Apple, Amazon, Meta, which is Facebook. They know it by Meta now. Google, Tesla. So these are the things we have to pay attention in the semiconductor industry in relationship to the biotechs if this instrument is going to hold and reverse back up to the mean. We are in a sharp linear regression downtrend. You can see that's the lower trend. That's the upper trend. We've retested it. We're falling further. Pay attention if we retest the backside or do we reverse back up. You can look at the QQQ, which is the NASDAQ 100, which is the ETF. It's in a similar situation. You can see where the fibs are. Let's go now to the RUT, the Russell 2000. We can see in the Russell 2000, we are sitting in a very critical area from the highs of 2018, the 2020, and the November rally, where we rallied off in 2021 all the way to up here where we topped in November. We have fallen further. This looks like an H pattern in a linear regression downtrend, but we are getting support. I'm going to zoom in here on the RTY to show you something here that I'm looking at. So if we look on the weekly, we have a bottom here, we have a bottom here, and a bottom here, and it's reversed back with a star or a doji, whatever you want to call it, that candle. If we're going to find support here, and the Russell does not want to continue from that mid-range between the 2D's linear regression channel, finds support and reverses back up, that would be great. The 18 SMA is right above us. But if we fall down, we fall back to the backside of the Bollinger Bands. There's a first band and a second band, and reverse back up. So pay attention to the RTY. It is the canary in the coal mine, or the IWM. The IWM is the Russell 2000. IWN is the value. So it's the same chart. You can see where it's finding support. And this is the tiny gap. You can see it in here. I have this oval. I can mark it with a different color. If I edit it, we can make it blue, red, green, whatever color. If I go to the red and I'll mark it, there it is. It shows red. But I'd rather do it in blue, something different, so people can see that there is a gap in this chart right here where we tested. We are sitting right above it. Does this give us the support and the retest of these three gaps in order to rally back up? And the IWN is the value, IWN, which is the value. You can see it. It's a slightly at the 100% January 4th of 2021 finding support. So let's remember, we look at different sectors. If you can't trade futures or commodities, you can trade the ETFs, which are the pool investments of those instruments. Let's take a look at now. I want to show you the GBTC, which doesn't have much history on it. This is the ETF fund for Bitcoin. And we can see that Bitcoin has found some kind of support. It looks like this is what somebody from another place says, you know what, this looks like a pattern of a crab. You can see the eyes here, and this is an arm. Does it find an arm, continue up, or does it fall further? And this is the other arm where it found consolidation before the rally up. If BTC gonna find support, it has to clear the 18 simple moving average in order to run back up, and that's GBTC. But if I go to /BTC in the futures, we can see that Bitcoin has filled one of these gaps. Like always, whenever I have a gap, I usually look at them. There's this gap. There was one here which we already filled. We tapped it. We eventually found support. If I zoom in here, we have this gap here. We have this gap here. We are consolidating in a baseline. In order for BTC to find support, I would like to clear the 18 simple moving average and the backside of this channel up here in order to rally to continue back up to inside that wedge where it found support and eventually fell through in its baselining. Does this mean BTC has found support? Possibly. If it did, that's great. If it didn't, pay attention to what the charts offer you. Let's take this channel out of the way because it's no longer valid. Remove drawing and just zoom back down. That's BTC in Bitcoin. Let's go now. Take a look at ETH, and you can see Ethereum. It's sitting right just underneath that linear regression channel, which is the wedge. You got this wedge here, this wedge here. You can see I usually put channel and wedges in my charts for breakup and breakdown. You got this gap here. We rallied, we filled this gap here. You can see there was a gap. It's baselining. If it clears the 18, look for the backside of this channel. And if we can clear this area, we look for the backside of these three candles up here where it finds support on the upper Bollinger Band in case things do turn up. In case it doesn't, you look for halfway back between these two linear regression channels, which is a wedge, and that's the midpoint somewhere in this area. So I hope this was helpful on Ethereum. Let's take a look at right now. I will do one equity, one futures. So we're going to do AAPL, Apple. We can see Apple has found it's sitting right underneath the 116 SMA and the 89 EMA on the weekly chart. But what I want to do now, since I've been using the weekly on the other instruments, I want to switch to a daily chart where it says 5-year weekly. We can go weekly, go to 1-year daily. And what I wanted to do is show you that after those three tops here, which are in a linear regression downtrend, I'm going to zoom in here just to the right side where we can see the candles a little bit more clearly. We can see we had that rally in that downtrend, filled these two gaps, touched them, looked up, fell back in. We are halfway through. This is the midpoint between the low, prior day's high, the midpoint, and the prior day top, previous day high, previous day low, and that's the midpoint of it in relationship to the move. We can get exponentially a Fibonacci extension of 50, 75, 100 down because of the volatility is high, 25, 50, 75, 100 up. Usually when you have these kind of large moves, when the volatility is there, you look for opportunity. If it's dumping, you are on the short side. If it's reversing, you look for the reversing back up into the trend. But if this is a failed 18 simple moving average on the daily and it cannot sustain this 136.50 area and it falls back down, we look for the 130 area, 129 to find support in Apple. So that's Apple. Let's now take a look at the future. I'm going to do GC or GLD. We're going to do the micro GC. Maybe it doesn't have enough information off in it, but if it does, that would be great. We can see on the daily chart, it is in a linear regression downtrend. It found support. It was trying to rally, found support, broke through the 18, touched the 50 simple moving average, couldn't make it, fell back down on the daily, lost the 18 SMA. Is gold going to find support at the 1620? Possibly. This is the 50% Fibonacci on the annual charts. Does this mean it finds support on this linear regression downtrend? Because that downtrend is coming from 3 years ago where the highs were made on the weekly chart. If I push it in, this is my linear regression downtrend where it may find support. If it does, that would be great, and it reverses back inside that wedge. But you can see it is in a linear regression downtrend. If it loses the 50, would look for the consolidation in this area before the breakout in gold and the 250 SMA. So let's go back to the daily on the chart, and we go now to GLD, which is the ETF for gold. We can see that gold is in a downtrend. We had found that backside of the channel as well. This was a gap area that it has filled. You can see it here. There's a little tiny one here. It is touching it. You can see it filled it. Does it fall further down to the backside here, or does it reverse back? Pay attention to the commodity sector in relationship to our dollar. Let's go put the dollar sign DXY, which is the American dollar. It has moved quite a bit annually. It has 3 times its value high, and it is sitting on the daily chart right above the 18 simple moving average on the daily. Every time it touched the daily, have you noticed in the last month, month and a half, 2 months, it has been testing and breaking up. If this time the 18 simple moving average does not hold the DX and we get a reversal back from the 113.80, 114 area, coming back down, you can see I have the weekly Fibonacci on it. I would like to remove this fib out of the way because this was the prior week, remove the drawing. And what I wanted to do is show you where the previous low was, the previous day high was, and the midpoint of it. So if I want to look at a 5-day range, this is day 1, day 2, day 3, day 4, day 5. So the range for the week, if I want to look at it on a shorter time scale and I want to measure the weekly retracement of the fibs, I can go D, time frame, intraday. I'm going to do this so everyone can see it. We're going to do 5 days. We're going to do 4 hours. In that 4-hour range, it's going to show me the range in the last 5 days that happened since Monday. Where is my low? It's here. Where is my high here? This is the support. So if I get a Fibonacci at the bottom, you can see this line. I grab this bottom here to this high here. This is in units of 25, not really a 23%, not a 38%, not a 50%, not a 61, not a 78, not a 100, but it is set in units of 25 from high to low. Then I have the extensions 2550 to the low. I have the extensions 2550 to the top. Then the 100% extension to the top, like 200, and the bottom minus 100. So if I want to look at the weekly and I want to change the colors, I right click on it. I'm going to edit the property so everyone can see what I have on the chart. You can see the -1 to the 2, the 0 line to 100, 0 to 100, the extensions to the bottom, and I put -180 and -80 here so we can get the extension. I would like to change the colors so I don't differentiate the colors from the weekly to the monthly. I usually do the weekly in a gray color or an off-white so people can see it, and I push OK and apply, and I can extend this fib for the whole week. Edit the property. We can see we can go back to the 9th where we can see the whole week range, the high and low on the dollar. And if I don't want to look at it on a setup, I can go in the settings. So I don't want to show the overnight to highlight it. If I remove the highlight, it shows here in the highlight, unhighlight, show. Okay, apply. Let's see, apply. Forex, so it has to be under the Forex, so it doesn't do that. Options, equities, appearance, so it doesn't show it. Okay. In the futures, basically, it's highlights that usually show correction, change in events, apply. So it doesn't really show it here in but if I go to the daily chart, we're going to go 1 year daily. If I zoom in here, we can see that the range that I did between the high and low for the week. So I know where my 50, my 25, my 75, 100 in the top, similar situation on the DXY. Let's now take a look at the /VX, which is the futures in the fear gauge in relationship to where we are today. The VX has a lot of Fibonacci's. I know my annual low is here. My annual high is here. This was created in March. You can see my annual is a little bit before, but it is basically giving me a range in the Bollinger Band and where we are. We had lower highs here. we had higher highs here. We retested, then we eventually broke up. But if I zoom in this area, I'm just going to go to the right, you can see that it tested a little bit. This candle here has not tested this candle here. It's a little higher. So I'm still getting lower highs in relationship. But this week's candle, this is my monthly measured move, but my weekly candle range, my low and high for the week, you can see them. I got them anchored. What I'm going to do is tell you, in case the VIX does fall below the $30 range to the 28, the market may get some relief because we are in an uptrend wedge in relationship to the push-up. If it clears the 32.20, 32.50 and breaks up this channel, it is more, the market will be more bearish. So pay attention to the VIX, which is the ETF for VIX for the ETF instead of looking at the futures. We can see this is a cleaner chart. We had higher lows from here. Even this candle is still higher than these. If I connect these channels here, except this one here barely, missed it by a little bit, this is a lower high. If I'm going to fall in, I want to lose the 18 simple moving average. You can see it. My Bollinger Band is the two bands up the top. If I'm going to break up, I have to hold the 18 to break up to the midpoint of this range and break up to the upper. If I fall through the 18, I look to the backside of the 38 and the 116 SMA where we broke out of this candle and this one down here. So I am not biased. We trade what the charts offer us. We know we are in a linear regression uptrend on the band as well as the channel on the VIX to give us an idea what instruments to look for. Let's take a look at Amazon. We can see Amazon is in a downtrend, and you can see that this downtrend still pointing down. We had looked, pay attention to this area. If it finds support or the backside of this channel, that's in Amazon. Let's take a look at now crude oil, CL. We can see in CL I have a lot of consolidation. I'm going to use the micro CL because I do have the weekly fibs on it, as well as the monthly measured move, as well as the annual Fibonacci extensions. I'm going to just zoom into this area right here to show that the prices, we can see we have lower highs from here. We are trending back down. Does it find support or not on the measured move? We have to pay attention. This Fibonacci is no longer valid. I have to remove it. I'm sorry, I have it there for the daily measured move. In the last 5 days, we had this look above and failed. And Monday we woke up, downtrend, consolidated down on Tuesday. When Thursday was up, then on Friday sold off. We are holding the 18 simple moving average. Pay attention in case we fall down below the 18 simple moving average, coming to the backside of this channel that we broke out of originally, or does it reverse back to the upside? So we're going to trade what we see in crude oil. And if I do the micro CL, you will see that the micro CL, you can see in the micro CL, I don't have much channels. All I have is those two tops. This is from the Ukraine-Russia. This is the reset in price because everybody's panicking. Then we had this wedge. Then eventually we fell down and crude starting to come back in. We are holding still the 18. Pay attention if that Bollinger Band midpoint in that channel holds, or do we fall further down, or do we reverse back up in crude oil? You can take a look at USO in crude. Let's just go USO. USO. Come on. USO. We can see that USO is range bound, holding below the 200 SMA right here, holding the 18 simple moving average underneath the 50 SMA. Let's go one more. We'll do right now. After this, I'm going to do the ES, but before that, I'm going to do a couple of equities and come back to the ES to finish the video. So let's take a look at now Meta. You can see Meta's on the ground. I'm not going to talk about it much. If it does find some support somewhere here on this wedge in baselines, and look for clearing the 18 simple moving average, which is the red and green one right here. Look for the upside. Let's take a look at Google. You can see Google. Google is in a similar situation, such as Amazon. Let's take a look at NFLX. I like the setup on Netflix. Netflix is baselining here. It kind of found some ground. We do have this gap up here, but if I zoom in this area, you can see Netflix looked up, holding right just slightly underneath the 50 and the 18 SMA. If it clears this channel, you look for the upside. If it falls back in, pay attention to the 116 support and halfway through this body on Netflix. Let's take a look at Tesla. We can see Tesla is starting to get weaker. It engulfed this last candle here on the weekly chart. It may have continuation to the backside of this band and the annual support around the 180. So that's Tesla. Let's go look at the ETF XLF, the financial. We can see that the financial looked up, closed right on the 18 SMA. Pay attention if the Federal Reserve Board slows down interest rate by half basis point, not too much high, not too much, keep hiking interest rates. See what if their policy changes in the CPI report as well as the employment. Let's take a look at XLF, XLE. That's the XLE. We can see that the XLE is baselining up there with 3 tops or 4 tops holding the 50 SMA and the 116. Let's take a look at XLV. Similar situation, still in a downtrend. Tested the backside of the channel holding the 18 SMA. XLK, that's the tech sector underneath the 18 simple moving average. Let's take a look at XLP. We can see that XLP looked up and fallen back down. Let's pay attention to where we are. Let's take a look at JNK, the bonds in by Bloomberg. You can see that the yield tried to look up, fell back down, tested the 18 and fallen back in. That's in JNK. If I take a look at the IEI, the shorter term maturity bond, if I'm zooming in here, I'm going to pay attention if it's going to hold this middle range or does it fall to the backside of the channel on the linear regression channel and the backside of the band, or does it find support and breaks the 18 and looks above this channel to rally back up. So let's see what next week holds for us. Let's go back to the micro ES, which is the S&P 500. What I wanted to show, we are in a linear regression downtrend. We looked above the 18 SMA. We had a nice sharp rally. Then we dumped back down in the micro ES on Friday. My most concern after the CPI report, we are holding halfway. And this is a great support. We found support before, but we have to clear 36.52, 53.55, as well as 36.90 in order to get support in the S&P 500. If the S&P does not give us any support, the backside of the channel would be the backside of the band at 34.50, and that would be for the micro ES. I usually use the ES myself, but I wanted to show the micro without a lot of noise on it. If I go to ES, ES, the S&P 500, I do have a lot of fibs on it, and it shows my measured move in relationship to the weekly. This weekly fib shouldn't be here. Activate this one. I should move it right to this area here on the weekly where it shows the high and low for the week. This violent move down gave us a 5 up, and on Friday they sold it off. This is basically my measured move for Monday Fibonacci extensions to the 271 low and the 61.8 up. So what we usually trade is what we see. We have an 18 simple moving average holding us underneath as well. We have this 200 Fibonacci fib extension on the monthly measured move. I hope this was helpful. If you have questions, please ask us. Once again, hit the subscribe button if you like it and smash the like button. Over and out.